Hey, how's it going, everybody? Welcome to another edition of the Swing Trade Newsletter. Going to get it out to you early today, get it over with. Pretty good month for us so far in the Swing Trade Newsletter, and let's kind of dive in first. So let's start off with the markets. We finally saw a little pullback. Again, nothing to be too concerned about, but we did get a pullback and pretty much expected, right? Because if you watch the newsletter for any week, like watch it last weekend, watch the one before, and you will notice I kind of marked out these levels for you right over here on the spiders, right? I said between 336 and 339, that little zone right there is where we're most likely going to see a pullback. And guess what happened, right? Spot on with the analysis. And that's exactly where we saw a pullback. And again, it's a very tiny pullback. And it's almost kind of funny to see people saying, oh my God, market pullback. Well, you have to pull back. Nothing just goes up forever, right? We got a little dip here, we got a little dip here, we got a little dip here. So, pullback was to be expected, and that's exactly what we got right into our levels. So we did a good job of kind of looking at that. So today we closed down into the 21 EMA. So, I wouldn't be surprised if we go right back up again, right? So most likely next week we'll see what happens. But next week, it's possible that we maybe go slightly lower, dip below the 21 EMA, take out some stop losses, maybe go into the 331, 329 zone right over here, and then we might go right back up again. But you never know, right? We wake up Monday morning, market could be gapping up right up again, and all back up into new highs. So in the market overall, we all know it's pretty extended when you look at the higher time frames, right? You look at the monthly chart right over here. We go in the monthly. You go to the monthly chart, we are pretty extended, as you can see here, and nothing can stay too extended from the moving averages. So right over here, 21 EMA is still down here into 292 on the monthly. Even the 9 EMA is around like 310. So we are definitely extended, right? We've got that little push up into our resistance zones that we marked out. And from here, a pullback was to be expected, and that's kind of what we got. But what's interesting today, which is pretty interesting, is notice how on this decline, the volume increased in the market, which is definitely a sign of concern, right? A sign of concern, but that doesn't mean you start going bearish, right? It just starts meaning that, hey, maybe we want to be a little bit more cautious going forward until the market goes back up into an uptrend, or we start looking for some short opportunities. We've pretty much been long mostly in the newsletter. We've had some shorts here and there, but mostly, I would say majority of the trades have been on the long side. That might need to change soon because of this, high volume pickup that we got to close the week and ended on a red note on the daily chart. What's interesting, however, is even on the weekly chart, you'll see we got a little red bar, which suggests a pullback is likely. Now, extent of the pullback is the question, right? We could just pull back right over here and just go right back up again, right? So something like this. We got that little push up, pull back, right? Push up, pull back, push up, pull back. Now this one might maybe pull back a little bit deeper, and then I think we're probably going to go right back up again. So it's interesting to see people calling market tops. I mean, I've been doing this 10 years, and everybody's been wrong most of the time. Since my 10 years of trading, I've been seeing people calling market tops on every little red day, or just saying, "Oh, market's topped out," and they've been wrong all the time. And problem is, people get married to their bias that, market's topping out, and they missed out on this run. Now, I don't like missing out, right? I like to just stay involved, have some positions, be nimble, right? That's the key to keep in mind. What's that song by Kenny Rogers? Know when to hold him, know when to fold him. Know when to hold a trade, know when to cut him. That's the key in trading. And we've done a pretty phenomenal job of that. I think overall for this year, market's not even up that much. I think, I don't know, like 3%, 4%, 5%, I don't know, something like that. The market's up for the year, and we've basically got triple the returns that in the newsletter that you would get by putting in the market so far. So we've got that little increase in volume here. We'll see what goes on at this point. My suggestion at this moment is to be, try to be less aggressive now, right? We've had a good run in the newsletter, and we're going to have, I foresee we're going to continue to have a good run. But, again, it's know when to put on the positions, know when to take them off. That's the key. But as long as the market stays below 329 on the spiders, Nothing to be concerned about. We're probably going to go right back up again. Once we start breaking below 329, start testing the 50 MA, that's somewhere that we might have to be a little cautious of, because if we pull back all the way down to 325, that could be, a little bit interesting, because you can see here we got that little push, we got a little push up here. So if you pull all the way back down there, then the next rally could be very interesting for potentially like a head and shoulders type of pattern. So again, time will tell. I don't care if that happens. It's actually good that that happens, because then you can get some good opportunities on the short side, and that's basically what goes on. So, for the year, for the newsletter, we've been doing a pretty phenomenal job. These are the results here. So we've made about 14.3 Rs with the newsletter. If you're risking 1% per trade, you made about 14%. You're risking 2% per trade, which is what usually I do, but I don't recommend for newer traders, because, number one, it's a decent amount of risk for new traders, and also if you have smaller accounts, you might run out of money, to take all the position. So that's why I recommend 1% or lower. But I do personally do 2%. So for me, it's about like 28% return at the moment. And we've had a pretty good run. Right now, we only have 3 open positions going into the weekend. We got 2 longs and a short, right, which we'll go over here shortly. But let's kind of first do our analysis here. Taking a look at the QQQ, NASDAQ, again, a little deeper pullback, right? Much deeper pullback than the spiders. And man, one thing is very, very interesting here is that volume. Today's volume, look at this, today's volume bar. Big red candle on the Qs. Again, right into the 21 EMA support, so that's something to be, mindful of. That we have a red candle, we have a high volume, but we're still into support at the moment. But what's interesting is this is probably, let's kind of go back and see. Yeah, this is the highest volume we've had since like August, right? And August, the market had a pretty decent choppy movement all the way down. But that's the highest volume here. So that, that is a sign of concern for sure. But again, price is the only thing that pays. Volume can give you indications of what might happen. But again, in the end, price is what really pays, because, people say, Anmol, what about volume, right? What about volume? Volume's coming in. I'm like, yeah, but, who pays you in your trading account? Price or volume, right? So that's the thing to keep in mind. But looking at the Qs, this is very concerning, because all we've got is green bars all the way through, ending the week with a topping tail and almost negating last week's candle. So it is a bearish sign for sure, right? For sure. But again, doesn't mean we start going bearish here, because all that can happen is we could just pull back a little bit more like this and keep going higher. So the levels to keep an eye on the Q is the 227 level. If we hold 227, we can go right back up. Once we start breaking below 227, that opens the door to the 50-period moving average around 220. And that wouldn't be such a bad thing, because that will give us a lot of opportunity for stocks to get into those, right? So nothing to be too concerned about here. But overall, we are, long term. I've been talking about this since the last week or so. I am a little bit concerned, because we are extended on the higher time frames, even on the Qs. Monthly chart of the Qs is way more extended than the monthly chart of the spiders. We got 1, 2, 3, 4, 5, 6 green candles in a row away from the moving average. So it actually would be nice to get a pullback before we continue higher. But overall, I don't think the markets are done yet, right? I don't think the markets are done yet. I think the market has one more push up, probably into the election. Again, I'm not a Democrat. I'm not a Republican. I don't care about politics, but I'm an analyst, right? I'm an analyst. I'm a trader. And to me, all indications look like, Trump is going to be reelected, which is not a bad thing, which is actually a good thing for the stock market in general. So again, take out your political views for a second. I don't care who gets elected, but the indications are that Trump will be elected, in which case the market will have another run-up. And that run-up actually could be concerning, because that run-up could take us like much, much higher, cause a blow-off top, and that blow-off top could cause a potential move down. So I think if the spiders get above 340, we're going to run up straight into like 370, right? And that might be a pause for concern, because if you keep running up like that, we get too extended, market can pull back, and, you could enter a recession. So I do think that this is not a time to take action on the short side, but it is a time for concern, because if I actually would like the market pullback and then we go higher, because then we can go higher for a while. But if we just continue to run up, it could cause a blow off top, and that could lead to a potential recession. But I don't think it's going to happen this year, most likely next year or towards the end of the year. So we still got time to prepare for that. But again, you in the newsletter, you're going to be fine. I'm going to help you mitigate the markets, and we're going to take advantage of every little opportunity here and there. So that being said, let's kind of first dive in by taking a look at some of our recently closed trades. NBEV, again, a great trade for us. We've made almost 3 yards, not in this one trade, but trading it twice. And that's the kind of trader I am. This is something I will talk about today. So first trade for us on NBEV was we bought it right over here, right? And then we sold it pretty much the same day for 2 hour gain. Then we got a pullback to the 9 EMA. We got a buy setup. We got back in it here. And then today I got out at $2.67. And the reason I got out is not because, I'm bearish on the stock. I really think that this stock is going to go, above $3 sometime. But again, you're a swing trader, right? You're not a investor in a stock. So when you're a swing trader, anytime something gets away from the 9 EMA, I like to take profits. And then if NBEV comes back down here again, 9 EMA comes in, we get another buy setup, I'll get back in it, and then I'll write it again, and I'll keep trading the swings. That is what swing trading is, right? Trade the swings. So NBEV, for now, I'm out of it just because I didn't want to hold it over the weekend. We were into some resistance to the left here. You see these little bases here, right? Little base here. We kind of came up into that. I really thought we could get $3 today. We didn't. So just before the close, I exited at 267. And again, I might be wrong. It could still go higher, but that's fine with me, right? No regret. So that's the NBEV trade we just closed out. We had ADPT was a little disappointing on the exit. It kind of shook us out here. ADPT was a trade that we got into this stock at 32.26. Our entry on this stock was right over here above this little red candle. Beautiful entry, and it closed looking like really strong on that day. So I said, okay, we're closing really strong. Let's kind of raise our stop because it shouldn't really wipe away that candle. But that day was weird. It came down. Market was weak that day, so market shook us out. It came back down and took us out for a tiny little gain. And then today it's continuing higher. So one trade I guess we missed out on, but we had to exit this soon anyway because it's got earnings coming up. So no harm, no foul. And that's the kind of swing trader I am. I'm not a swing trader that's just gonna hold on to stocks because what's that saying? There's a joke, right, in the trading world where a technical analyst and a fundamental analyst go out to dinner, right? They're having their steak, they have their steak knife, they're cutting through the steak, enjoying their steak, and while the fundamental trader is cutting through his steak, right? Suddenly his knife flips up, goes into the air, and the fundamental trader watches the knife go up into the air. The knife comes all the way back down and bam, stabs him in the foot, right? And then the technical analyst is like, why don't you get out, right? Like, why don't you move your foot? Why don't you move your foot? If you saw if it's coming down, you saw it coming down, it's about to hit your foot. Why don't you move your foot? Then the fundamental trader is like, I thought it would go back up, right? So that's the thing. I don't like to think it'll go back up or anything. I just do my trading, see what happens and let the chips fall where they may. That is trading, and that's the mark of a good trader, to be nimble and to be, in and out and mitigate the markets, because number one goal for a trader is to protect your profits, right? And also protect your capital. That's the number one gain. So ADPT looks higher. If you guys are still in it, looks good. It might actually run up much higher, but it's got earnings coming up on the 26th. So be sure to get out before that. I don't hold through earnings. It's gambling. I don't gamble. All right, so that's one we closed out. What else did we close out? CIM, another one we closed out. This was a 3-bar play on a daily chart. Again, perfect exit, right? 3-bar play on a daily chart. We got into this 22.51. It went up. We got multiple days in our favor, and I got out at like 22.80. And today, look at that. It's closed right back to our entry with a big red candle. So why did I get out of this? Well, look at this. It went up straight, got away from the moving average. So it's got to pull back, and today it did. So that's one of the reasons. Again, not a great big gain, but we made money on it, and that's all that matters. What else? Yeah, HOME. Today I closed that out as well. Again, I'm just mitigating in case the market does pull back. I don't want to be caught in my portfolio long a bunch of stocks. So this one still looks good. I don't think this one is bad. I think this one still goes at least to like $7.90, $8, right? Maybe even to the 200 MA at 850. But again, notice that we got 4 days in our favor. Moving average is still down here, so it could pull back. So I would rather get out when it pulls back, get back in it, and then ride it back up again, right? So swing trading. What does a swing trading means? Swing trading. So I got out here. If it pulls back, gives us another buy setup, I might get back in it and then maybe take it back into our original target. So that's how I treat trades, So I might not get big winners like, 3 hour, 4 hour on my trades, but what I'll do is I'll get like 1 hour, 1.5 hour, and then on a pullback, I'll get back in it, get another 1.5 hour, and I'll make my hours up that way. But profit protection is the key in this market. You don't want to be caught long or short. You don't want to be caught in one direction, because let's say you're mostly short, market goes up, you're screwed, right? You're mostly long, market goes down, you're screwed. So I don't want to be screwed. That's what my trading is. I want to make money, right? I do this for a living. To me, this is way more important than anything else. No, people can sit on the sidelines and comment about it. Oh my God, Anmol takes too many trades. Yes, I do. I've been doing it for 10 years, right? And that's kind of what my trading style is. So that's the HME. We've done a good job with that one as well. What else? RAD. This is one that, you could have got more profit on. I closed my position out. So I got out of this RAD and we made a little bit under 2R. We made about 1.72R. And today it had another nice up day and you could have got a much, much bigger target. I still think this stock can go higher. But again, I don't want to be caught long in a market that might pull back. So RAD we locked in profits on. What else did we do in this news recently? Let me take a look at my account. And that's about it, That's basically what we did. But we're about 14.3 hours in our favor right now. Going into the weekend, we got 3 open positions. One is the ZAGG. We got into the stock at $8.40. Closed today at $8.41. So we're pretty much break even on this right now. It actually went higher to like $8.70. Still looks good, but just be careful. It's got earnings on the 27th of Feb. 27th of Feb is Thursday. So we have to be out of this stock before Thursday. So most likely on Wednesday, you will get an email from me, okay? Regardless of where the stock is, most likely going to get an email from me on Wednesday saying, hey, ZAGG exit, right? Because I don't hold through earnings. So keep a lookout on my email on Wednesday. But right now I'm in this stock. We got into this 840. We had our original stop at 760. I have since then raised my stop to 782. And I think that's where I'm going to keep it for now. I might raise it a little bit to like under $8. That's something I might consider. So keep an eye on the newsletter. I'll probably bring the stop up to like 798 or something like that, under $8. As long as it stays above 8, it's fine. And hopefully this thing can go back up again. The whole idea behind this trade is if you go to the monthly chart, you'll see here how it came down to support, moving back up again. And you can take a look at the weekly chart. You'll see weekly chart is kind of the main reason I got into this. And, earnings are annoying as a swing trader because I do think this pattern goes higher. You can see this weekly chart always below the moving averages. Now the moving averages are tight together. Price is getting above the moving averages. Got a nice base breakout. Actually got an inside candle on the weekly. It might actually do a weekly 1, 2, 3 into the $10 area. So that's something I do like. But again, I don't hold through earnings. And here's another example of, like earnings sometimes are annoying to me as a swing trader. Because check this out. Remember this stock, UFPI? Remember that stock, guys? I called it on the weekly chart as a buy setup right over here. We got in it. We ended up trailing out for, pretty much a small loss because it had earnings coming up. And after the earning, this thing took off. So, but, it is what it is. That's swing trading for you because it could have also been the other way. It could have gapped down as well. So that's why I don't hold through earnings. It's a risky move. And you will see on this day, even though it went up, it actually went down all the way first and then came back up and went higher. So that's the UFPI. That's that. What else? And then we have the MBIO. This is one I got into today. MBIO. It's a biotech stock. Mustang Bio. I got into the stock today at about $4. And if you look at this chart, kind of looks messy, right? You don't see the pattern, and that's fine. I'll explain it to you. My reasoning behind it. The reason I like this stock is because if I take a look at it this way, you kind of draw your trend line like that, right? And you can see it's been holding the trend line here, and it's coming back down. It's still holding that trend line here. So I think this could go right back up. You could also call it a buy setup right into the moving averages. 200 MA is down below, so that's some support for us right there. But the bigger picture pattern is if I really zoom this chart out, now you look at that. This is the reason I got into it, because this stock has been holding this zone, right? Goes down, goes up, resistance, goes up, resistance, right? Comes down, hold the support, right? Holds the support, comes back up, resistance again, resistance again. So I think it's going to get ready to make another attempt to touch that resistance and maybe even break out. So here's the thing: if it doesn't break out, if it just touches the resistance, that's already like over 2 to 1 for us, right? That's already is over 2 to 1. But now if it breaks the resistance, look at the last time it did that, into like $10, right? So when it breaks resistance, it could really go higher. It's kind of like you could actually even call it an inverse head and shoulders if you really want to call it. So if I draw this for you right over there, you could even call it like your left shoulder here, right? Your little head right there, and you could call this like the right shoulder forming, and you could even call it that as a pattern, and you could even call it a what's that other pattern? Cup and handle, right? You can even call it a cup and handle. If I zoom out here, right, little cup, and this is like your handle. If it gets above that, should be good. I think the stock really needs to get above $4.16. That's where the real move will start. Above 416, that's where people will start getting FOMO and start jumping in it. Right now, our stop's at 367. I'm going to keep my stop loss there. If next week we get above $4.15, then I'll probably bring my stop to like 384, right? So what I want to see is I want to see this get above here. Once it gets above here, I'll bring my stop from here to like right under here. But so that's the trade that I'm in on the MBIO. I like it. If you take a look at the higher time frames as well, look at the weekly chart. So weekly chart's been a downtrend, phase 4 downtrend in a phase 1, maybe getting ready for a phase 2 breakout. Now the real entry obviously is above 480, 490. That's where the phase 2 will start. But I'm trying to anticipate that based on a weekly buy setup entry. So that's kind of what I'm expecting. You take a look at the monthly chart as well. Phase 4 downtrend, consolidating sideways. Looks like it wants to kind of head higher here. So that's that on the MBIO. Today we added one short. Thank God I did, right? I wanted to have one short in my portfolio. I was scanning my brains out. I couldn't come up with a good short. Finally came up with one, CDW. So this is one that we shorted today. I sent out an email with the trade on it. My trend lines are already drawn on this chart. So you can already see what pattern I'm thinking, right? It's a little wedge type pattern below the moving averages. So let me zoom out here. So you see this stock has been above the moving averages, uptrending for a while. And look at it. For the first time in many times, the moving average is now rolling over, right? Now the 9 was above the 21. 21 was above the 50. And now look what's happening, right? They all crossed each other. And 50 is above, 21 is below, 9 is below. You got this little wedge type pattern here on CDW. We have a big stop loss. That's my only concern. We have a pretty big stop. But, we have this little wedge pattern, and today broke down. I shorted it right under there. Stop loss is all the way up there, which will probably lower soon. But I really want to see this break under like 132.50. I think then it could probably come down into the 200 MA and maybe even lower, because let me show you the monthly chart. Look at that, man. That monthly chart is like, like how sometimes you get water in your mouth when you're hungry. When I look at this kind of chart, which is running up, crazy extended big monthly red candle, inside candle. So if it actually breaks that wedge pattern completely, what will happen is it will trigger a 3-bar play on the monthly chart, right? So if in March, breaks that little low here, you could take out the monthly chart and it might push you back into like $100 into the 21 EMA on the monthly. So absolutely possible, and that's one short we have. So those are the only 3 trades we got open at the moment. And for the first time since I've doing this newsletter, I have to say, this newsletter, I don't have many trades to give you, right? Because I actually want to be sure of the market. I want to be sure what the market's doing. Is the market actually going to roll over here, high volume? Or are we going to pull back and go right back up again? So if we break back above 339, I'll start going long again, right? If we break back below 329, I'll probably start looking shorts, right? But in this zone, I want to stay away from being too aggressive in this zone. I don't want to do too much in this zone because this is a tricky zone, right? So once we break above that zone, I'll start going long again. We break below this zone, I'll start looking for short ideas, right? But in this zone, I want to try and be nimble, right? Take our profits where we get them and not overstay our welcome on the stocks, right? So pretty good, so far this year. As you can see, this is the newsletter. So we've got 14 hours already for this year. And in 2019, in 2019, we got 15 hours total, and we've pretty much reached last year's return in just 2 months. And most of that came because obviously I take a lot more trades than Jared does, because I think overall last year, how many trades did we have? 19 by 146. What is that? 146, 19. So all of last year, Jared called 127 trades, which is all of last year. I think I might have already called all of that in like 2 months. So yeah, I've called 74 minus 19. So yeah, I've pretty much called a third of what Jared called all of this last year. So I do take a lot more trades because there's a lot more opportunity out there, and I want to take advantage of that. So that's that. As far as the newsletter, I want to talk about bonds. I mean, bonds had a good move today, right? I mean, look at the bonds. I told you. We talked about it. Go back and watch last week's newsletter. I talked about, hey, we took the bonds right over here on this wedge breakout, and we did a good job. We took profits on the way up right over here. And then last week's newsletter, what did I talk about? We're getting another consolidation here on the TLT. Look to buy it above here, right? Stop loss, put it down there, and look at that. You got another move up on the bonds. So a pretty good trade. Gold today also had a pretty big run up, right? Another thing we talked about in last week's newsletter, that gold is, again, consolidating here. Potentially is going to run up again above this area. And we got another run up on the gold. But, I'm not a big fan of gold. I'm not a big gold fan, Not a big gold fan. But the pattern suggested to move higher, and that's what you got. And gold might continue to go higher. But it's just not a place that I want to get involved in right now with the gold. Okay, so that's the gold. What's interesting, however, which is very interesting, is the US dollar, right? So usually, right, historically, what happens is when the dollar goes higher, commodities like gold and stuff go lower, right? This year has been completely out of whack. This year, the dollar's gone higher, gold's gone higher, everything's gone higher, and all has gone lower, which is interesting. But notice today we got a big red bar on even the dollar, on the US dollar, which is very interesting, right? That the dollar wants to pull back. So that's very, very interesting to me, And you can also look at the dollar here. We got back above the moving averages, but, you're looking tired at this moment. But I think dollar still goes higher. You're probably going to get a pullback on the dollar, and then you're going to continue to go higher on the dollar. What's another interesting part is oil. Oil finally got a little bounce off that support area we've been looking at. And I did mention it in the multiple other newsletters that look at this zone right over there, right? And oil came right back down into the prior support where it's bounced from once, twice, right? 3 times, came back down here again, bounced yet again. But for some reason, I'm not that convinced of this bounce, You look at the higher time frames on the oil, it's not that bullish, You could easily get something like this. You could easily get, if you look at it this way, you could make a case that, hey, this was our trend line, uptrend line that broke. This is just a retest, and then we might continue lower on oil, which is not good for the market because if oil goes lower, what happens? Look at the energy sector. Energy sector mimics oil, right? Energy sector goes lower. If energy sector goes lower, what happens? Stocks like ExxonMobil go lower, right? Stocks like Chevron go lower. So if these big cap stocks go lower, what happens? S&P 500 goes lower, right? Because that's what it comprises most of. So that's why there's some signs to be concerned about the market right now. But that's why I'm saying as swing traders, we don't have too much to be concerned about because we have our stop losses and we just got to be mitigating the market as we go along. Okay. So I do have one short trade that I did call, which hasn't triggered. We're waiting for it to trigger, is AVTR. This one is one I already traded before. It didn't work out. This little tiki bar triggered me and then stopped me out. But now it's looking interesting again. Same reason. It's been above the moving average, and now moving averages are curling down. They're getting a crossing sign here, and you're looking like you want to enter a downtrend. So I have another order to short it under this tail. Stop loss above here, right? So if it breaks down below that, to expect a move lower on AVTR, that's what I'm looking to do. I have... and then we have a few trades that haven't triggered for us yet, which is the CONN long. I'm still going to keep that order in my system, I'm not going to cancel it. Looks great. CONN, ConAgra. We're looking to buy it above, right over here, right? Put our stop loss right under this little base and look for a move higher. I'm going to stay with that trade. It hasn't triggered yet, but we're going to wait for that to trigger. Another one that I called today was VSTM, Veresteam. Again, I like how the market was red. This closed with a green candle. I'm going to keep my order in the system. I'm looking to buy it above here, right? Put my stop loss down there, and then hopefully it does another move higher, just like it did when it got above here. It made a move higher, got above here, made a move higher, got above here, hopefully makes a move higher again, right? So that's the VSTM. Gonna keep that in the system as well. Another one I called, which has not triggered, we're not in it yet, is NVAX. It's again a biotech kind of a stock, and this one I like how it recently popped up, right, and it pulled back, and it's not really going down, so that's good sign. So if it gets back above 818 here, with our stop loss down there, I'm looking to get into this one as well, and it hasn't triggered yet. Okay, another one hasn't triggered for us is LQMT, Liquid Metal. Again, this one I have an order to buy this thing if it gets above here, put my stop loss down there and look for like a move back up higher. Again, has not triggered for us. So these are going to remain active, meaning I'm not canceling them. They're still in the system as open. All right, here's one I'm watching, but I'm probably not going to do, is CPAH. So this is one that I had already called long while ago, right over here. Unfortunately, it missed our entry by gapping up, so then we just had to cancel it. But now look, it's pulling back into the moving averages, got a nice setup here again. I think if it gets back above like 260, right, it might go higher again. So this is just a watch for you guys, but I'm not going to do it just yet. Not a big fan of something that gaps up and comes down. I'm not a big fan of buying stuff after they gap up and come down, but it is definitely a very interesting setup here on the CPAA. Here's another one, TIGR, but it already went. Yeah, I was looking to see we could probably get back in it above like 380, but today already it made a run to like 420, so now I'm not interested in it. Let's see, this is one I'm actually very interested in, Workhorse Group, WKHS, right? If it gets back above $3.80, but I'm not going to be calling this official. I'm not that happy with the setup, but it's a nice long-term setup. If you zoom out here, strong move up, right? So if you draw a trend line like that, it's like a wedge pattern. So if it gets above 380, it could go back up to like 5-ish. But I'm not happy with the setup yet, so I'm gonna stay away from that for now. Another interesting one to me is Maxim, MXIM. But again, these are long-term setups on a weekly and monthly chart. I want them to get back above like $65, so that's not happening anytime soon. So we can pass on that one. Let's see. I'm just doing my scan here. Yeah, so looking at the items right now on my watch list, I'm not a big fan of anything right now. I think so the ones that have not triggered for us, we're going to keep those active. The ones that we're already in, we're going to keep those active. But I'm not a big fan of really liking anything here. I was going to short this today, really disappointed. It didn't wait for me. Stocks should wait for me, But this one I was going to call today short under 36. It already dropped to 34.50. So I already missed that trade. I can't do it anymore. Too late to do that. This is one that could go higher. Anaptys Bio, however you pronounce it, ANAB. If it gets above $17.10, looks like it might go higher, just like the HOME. But not a big fan of that. I'm going to pass on it. We canceled the NWL because it never triggered, and today closed with a red candle, so that trade is now canceled. Let's see. Going through my watch list here. Yeah, so that's about it. I mean, I actually don't like anything else here. And then that's that, We got to protect our money. We don't always have to trade. I always tell people, my goal is to make money, right? My goal is not to trade, right? So the goal, right? What is the goal? The goal is to make money. The goal is not to trade. You might be like, what are you talking about, right? Because you have to trade. Yes, but the goal is to make money. How we make money is through trades, right? But not taking trades sometimes is the best thing to do. You have to wait for your opportunity, right? I call it like trade like a sniper. Sometimes there's a lot of opportunity. There's like 5, 6, 7 trades. Great, I'll take all of them. Sometimes there's nothing that I'm really in love with. In those environments, it's important to just not do a whole lot and just wait it out, right? So there's a couple things I am watching, like even this one, TORC, Arestro Bio, whatever this thing is, looked really good today. If I zoom in here, because sometimes it's hard to see these small stocks. Zoom in here, little mini 3-bar play. Today, I think if this stock gets back above like $1.70, right, this thing could really push up higher above $1.70. But not that interested in this one right now, to be honest. I want to get more clarity on the market. Let's see. Doing my scanning here. CASA looks pretty good. CASA has a long trade above like $4.95, but again, I don't want to really go long anymore until the market confirms itself. So I'm going to wait it out. OSTK looks really good. Overstock above like $9.50 looks really, really good. But did it have earnings today? Yeah, I think it had earnings today, or it's going to have earnings today. So forget about that one. Yeah, so that's about it. Maybe we could get back into the GE. So, we already did the GE long first right over here. Then we took our profits right as it touched the top of that channel. So when it comes back to the bottom of the channel, that'll also be the 50-period moving average. So I think we could probably get back in the GE under 12 and then see if it goes right back up to the top of the channel. All right, so that's one thing we can definitely consider. Yeah, so that's about it, really. I'm not looking to call anything else. Although one stock I am interested in is IRBT, which I'm probably going to call. So this is one I already called last week, but it never triggered for us, so I canceled it. But I still like how it's holding. So I think if this thing gets back above 54.50, I'd like to get in it long, because I think this could go to like 64. So this is one that we might potentially do IRBT long. But apart from that, I'm not really going to do anything going into this next week. As I said, I want to be clear on where the market's going from here, because the high volume is a sign of concern. So I want to wait to see if the market breaks 329 or breaks 339, right? In this zone, as I said, I want to be cautious. So throughout the next week, if I come across any good ideas, obviously you guys will get an email from me, right, with the trades. But for this week's newsletter, we're going to just stay with the trades that I've already called that haven't triggered. NVAX, CON, VSTM, AVTR, and LQMT. And the only new one I'm going to be calling is IRBT. All right, that's the only one that I'm going to be calling right now. And we're going to stay with our open trades. All right. So that's it for today. If you guys have any questions, shoot me an email, anmol@livetraders.com. I know a lot of you guys expressed interest in the swing trading course, so I'm going to try and work on it for you. Maybe we even do it live. That might be better, in fact, and then we'll just record it for later. So I'll think about it. I'm working on it right now, swing trading course. It's not going to be, I don't want to come up with a quick course. I know you guys want me to teach you a swing trading course, but I'm not going to just, come up with a course just for the sake of it. I want to make it good. I want to make it really good. Like, I want to show you the setups. I want to show you how I scan for them, how I want to show you auto entry. So I want to make it really good. So it's going to take some time to come up with like a good course that you guys can, learn. All right, because we're going to talk about market timing. We're going to talk about extensions. We're going to talk about in-market internals, right, and all of that good stuff. So I'm going to be preparing that for you. Hopefully, I can come up with it in a couple months or so. Again, you have to bear with me. Good things do take time to come up with. So that's that. And what else? Oh, yeah, one quick thing. So there's a combo that we're running until March 1st only. Okay, so if you are a day trader as well, you know that the day trading room is $147 a month, right? And then the swing trading newsletter is $97 a month, right? So starting until March 1st, we're offering a combo, which is $197, right? So instead of paying $147 for the room and paying $97 for the newsletter, you can get both the newsletter and the trading room for a total $197 a month, but that is only up until 1st March, right? In fact, I think from 1st March onwards, we're going to raise the price for the newsletter. Now, nothing to worry about for you. Those who've signed up, you're going to continue to get your existing rate, right? So you're going to continue to maintain your subscription. Nothing will change for you. You're not going to see a price increase, but most likely I'm going to be raising the price for the newsletter in a couple of months to $200 a month. But nothing to worry about you guys. You guys will continue to have it at your current rate as long as you're a member. But I'm going to be potentially raising the prices just because, a lot of people are in the newsletter now, and sometimes it becomes tough to get in the trades and out of the trades, right? Because everybody's getting in, and that causes a huge volume. And I want to try and avoid that, if that makes sense. So that's why I don't want more people to come into the newsletter, because to me, my trading is more important than anything else. So, which is weird because you would think I would want more members. I actually don't. So to discourage that, we're probably going to be raising the price for the newsletter, but nothing to worry about for you guys. All right. So if you guys want the combo, sign up for it. Also, if you are in California or if you can come there in May, we're having our mentorship, right? May 16th, May 17th, May 18th, 3-day live trading mentorship in San Diego, California. All right. You're free to welcome to come from anywhere in the world. I think you can email me. I can send you the pricing and everything. It's a 3-day intensive. You're going to learn the strategies. So day one, we're going to do some teaching, full day from 8 a.m. to like 5 p.m. We're going to learn strategies, market timing. We're going to teach you everything from the book. And then Sunday, we're going to come in. We're going to do the same thing, do some more teaching. Then we're going to develop your trading plan. You can ask any questions you want. Everything will be live, and we'll help you develop risk management, trading plan, setting up your platform, basically setting up your trading business, teach all the strategies, everything. And then day 3, for those of you who like to day trade, right? So on day 3, we're going to scan together, build our watch list together. We're going to go through our morning watch list, and then we're going to trade together, right? So we're going to all trade together on day 3. And if you don't want to trade, or if you're new, no problem. Just sit behind me, right? And just watch me trade, right? So that's also on day 3. And then after all that's done, we'll go out for like a nice dinner. So it's going to be awesome. This is going to be our 4th live event. Yeah. First one we did in 2015 in New York. Second one we did in Miami. And third one we did it again in New York. This time we're doing it in San Diego, the 4th one. So it would be nice. Again, this is, this is more for people who actually are serious about doing this as a career, right? So if you're literally serious about doing it as a career, then, this is going to be an investment in yourself. And it's going to be fabulous. And you can ask anyone else who's attended a live event from us, and they'll let you know. But anyways, that's it for me. Hope you guys have a nice weekend, and we'll keep in touch again with the next newsletter. And throughout the week, I'll obviously give you guys updates and things of that nature. But just be careful, just be nimble, right? And any questions you have, let me know beforehand. And we'll let you know. And one thing I want to explain. Sometimes it's possible maybe someone doesn't get filled on a trade, or get skipped on a trade, or maybe you forgot to take a trade or whatever, right? Here's the big picture. Doesn't matter. If you miss one trade, it's okay. Nothing to be worried about, right? Or if you take slippage on a trade, that's okay too. Nothing to worry about. I take slippage all the time too, because here's how I think about it, right? So let's say we end the year, okay? So let's say we end the year making, 40R, let's say, okay? So let's say we end the year making 40. So we end the year, let's say, making 40 or 50R. So let's say the newsletter makes 50 Rs in a year. Now, if you miss a few of those trades, it's not going to matter, right? Your results are still going to be positive. Sure, it's not going to be exactly the same, but it's still going to be nice results if you miss a couple trades, right? And the other thing is that, let's say if you take slippage on every single trade that I call, great. How much can you take slippage? I asked the room today. Some people said 3% slippage. Some said 5%, right? I will say even if you take 20% slippage and your results are 20% less than what I got, what's 20% minus 50R, right? Minus 10R, right? Is that right? Yeah. So 10R minus, so minus 10R. You still make 40R. That's still 40% on a 1% risk. So sure, you might not, if you miss a trade or here and there, or if you take slippage on it, I'm giving the benefit of the doubt. Take 20% off. Take 10% out, right? I mean, realistically, 10% is fine, but I'm going to say take 20% out. Your results are still good, right? So don't worry about it, right? Don't worry about slippage or things of that nature, because over the course of the year, it all adds up. And my suggestion also is that if you intend to stay a member of this newsletter, my suggestion is go with the annual package. you're actually gonna save more money that way. Okay. So again, my suggestion, I'm gonna throw it out there. So if you've already decided that okay, you like this newsletter, you're gonna follow it, you're gonna do it for the whole year, then guess what? Right? Then guess what? Sign up for the year. Because right now you might be paying $97 a month. What is that? That is $1,164 a year. Right? I'll just say this. Sign up for a year. It's $997. Right? So if you sign up for a year at $997, you're gonna actually save money because 1164 minus 997. So you're actually gonna save $167. That's almost 2 months worth of subscription. So that's my offer to you guys. If you decided you like what I do, you like this newsletter, just sign up for a year. It's gonna save $167 a year, and you're gonna be grandfathered in at that price. So next year, if you decide to continue, you can continue at $997, right? But I'm already telling you, I'm raising the price for the newsletter to $200 a month. But if you're in it before 1st March, then you can get it at the price that you get it at. All right. So have an awesome weekend, everybody. I'll be back with you in the next edition of the newsletter. But throughout the week, you'll still get updates from me. Any questions, shoot me an email. Have a good one, guys.